last time we met was back in March, and interest rates were about 3.25%. And I think back then we thought the projections were going to be about 4% tops, right?
Now, somewhere in that range.
Now we're about 5.8 to 6.25.
Yeah.
What the heck is going on, man? Tell us.
Inflation.
Okay.
We had a. Most of the people in the government thought inflation was somewhat under control, maybe transitory from last year, but it looks like it's higher than expected. And inflation is the tide that raises all ships, so everything went up with it. So I look at it kind of like a pendulum. I think we were held so low for so long with interest rates. I think the banks and the feds have kind of let it go, and we've swung pretty far over here.
Yeah.
I don't think 6-7% rates are really sustainable long term.
Okay.
But it's kind of the market we're dealing with at the moment.
I think it's safe to say that it was pretty unfair for us to experience the 2 to 3% interest rates for the 2+ years that we did, right?
It's just not a real rate. It's something that, look what had to happen for that to happen. And the feds had to keep them low. They had to artificially keep rates down by buying mortgages and just pumping money into the economy. It's just, we got a little spoiled. And now people are thinking that 5-6% isn't a great rate when it really is historically. But when you've just seen 2-3, it's tough to look at 5-6.
Yeah, I think that's going to take some time to get used to. And what I'm telling my buyers and my sellers is that we're just going back to normal. We look back at like 2019 before the pandemic, we were at approaching 5%, and I think we took a little hiatus and we're right back on that trajectory. Does that sound?
I think that's the best way to put it.
Okay.
We're not going up, we're going back. This is more back to normal. I think we're a little inflated right now. I think we'll see things improve a little bit, but the number one thing that what I always talk to our buyers with especially is, interest rates are not permanent, right? You're getting a 30-year fixed mortgage, but it doesn't mean you have a rate for 30 years. Nobody holds these rates that long.
That's true.
Realistically, even if you have a great rate, if you spend 30 years paying it off and you never leverage that property by some form of refinance, you're actually costing yourself a ton of money. So if we have a 6% rate now and rates go down to 4, then you just refinance and you fix it. If rates keep going up, then it's a good thing you bought what you did. But no one's ever bought a house, and the benefit of owning a home has never been the rate. So when rates were low, you didn't buy a house because they were low. That was good.
Yeah.
But now the rates are high, you don't not buy a house because rates are high.
Do you see the interest rates increasing, and do you see home prices increasing from here to the end of the year?
I think this year, we've seen the appreciation we're going to see. So I wouldn't be surprised to see houses stop or maybe come down a little bit in price. We're not going to see a crash or some big correction because there's just not enough supply out there.
That's right. Yeah.
There's so many more households that need a home than ever has been in history, and their supply is so low that values are going to hold. But I think prices might come down a little bit. I think rates are probably in the top of where they're going to go unless something drastic changes. So hopefully in the next few weeks to months, we start seeing them kind of come down to maybe high 4s, low 5s. I think that's where they belong, for a 30-year fixed rate.
Have you had buyer clients that you're doing loans for that hem and hawed about 3.5 and 3.8 or 4% maybe a month or so ago, and now they're regretting it?
Yeah. It's funny. When it first happened, we saw a big jump in rates pretty quickly, and everybody kind of took a step back and kind of assessed it. But now I think everyone realizes that we're back to normal. This is more normal. There's not as much pullback about rate because I think they understand that it's not a permanent thing. You can always fix it. It's a better tax deduction if you have a higher rate.
Yeah.
And one of the things I coach a lot of these people is this year in the private sector, wages are up 6 to 8%.
Yeah, that's great.
So the payment's higher and the price hasn't necessarily come down, but you're also making more money to help absorb that.
So you're not seeing a big crash in rates. You're not seeing a big crash in prices.
No, I think the most important thing to remember is it's not a big change in the market. We're just going back to normal.
Yeah.
And normal has always tracked in this range, and real estate's always been the most powerful investment in the world. And so if we went from 3 to 12, that's a different conversation. But 5 to 6% is completely normal. It's just a shock because of how low we were. But it doesn't deter the fact that it's still an amazing investment and always will be, because everything else is going up with it. Gas and rent and instability in those markets make real estate that much more powerful regardless of what the rate is.
Why is that though? What are some benefits that homeowners have, regardless if it's a 2% rate or a 6%?
It's the biggest wealth creator in the world. You know, it doesn't. If you buy a house for $500,000, you're appreciating based on that $500,000. It doesn't matter how much you put in. It doesn't matter what your interest rate is.
Yeah.
You're making real wealth, the biggest investment you're ever going to have, and you've got stability because the mortgage payment doesn't go up. You're not renting. No one can kick you out of your house. You've got tax deductions on your on your tax returns, and on top of that, you get to live there. You put your family there. The rate will always work itself out. The home is what's always matters.
No one's increasing your rent annually.
I mean, if you're renting and you have an opportunity to buy, then you need to pull the trigger for sure.
Yeah.
Because the rent is, there's just no saying what's going to happen there. You have no control over where you house your family. That's a scary thought.
That's true. Great wealth of information. That's why I always like talking with Greg and use him for all my buyer clients. I love the fact that you're able to take someone's situation, walk them through it, coach them. I mean,
Sure.
You've kind of used that word a couple of times already. Coach them through it and let them know how they need to get to a place where they want to be.
Right.
So I've always appreciated this guy. So, Greg, thanks again for your time, man.
Appreciate it.